Hello and welcome everyone. I'm Paul Reed, Director and Wealth Manager at Gemini Wealth Group based here in Sutton Coldfield. We're proud to be an independent financial advisory firm, established in 2006 with a clear mission including to help individuals and families achieve financial clarity and confidence through expert personalised advice. Today, nearly 20 years on, Gemini Wealth Group is home to a dedicated team of over 11 financial advisors and a wider support staff, investment team and legal services department, all committed to delivering exceptional service across their individual disciplines. With more than 2,000 active clients nationwide, our reach is broad, but our approach always remains personal. Whether you're planning for retirement, wanting to mitigate tax, manage investments, or navigating complex financial decisions, we're here to guide you every step of the way. So let's talk about inheritance tax, which is one of the most important and sometimes overlooked areas of financial planning. And it's definitely something that affects more families than many people realise. In fact, following Rachel Reeves' announcement in the budget last year that unspent pensions will, from April 27, form part of your estate for inheritance tax purposes, the inheritance tax net is definitely catching more and more people, and without proper planning, it will significantly reduce the legacy you leave behind. But inheritance tax isn't just about numbers. It's ultimately about protecting the people that you care about. It's about ensuring that your children, your grandchildren or other beneficiaries receive what you've worked very hard to build, rather than seeing a large portion of it go to the taxman. Now the good news is that if you want to mitigate inheritance tax, you can, and there are plenty of strategies that will help you do that, some of which I'm going to touch on today. There's a famous quote from former Chancellor Roy Jenkins, who said that inheritance tax is a voluntary levy paid by those who distrust their heirs more than they dislike the inland revenue. It's a really powerful reminder that with the right advice and planning, much of this tax can be mitigated or even avoided altogether. So let's look at just some of the ways that you can reduce the impact of inheritance tax and make sure more of your wealth goes to the people that you care about. Let's start with a simple and inexpensive solution that everyone should do, and that is making sure that you have a valid will. It still shocks us today how many people do not have a will in place in the UK. Having a will is absolutely essential when it comes to inheritance tax planning. It will ensure that your assets are distributed according to your wishes, providing clarity and certainty for your loved ones. Without one, your estate will be divided according to the laws of intestacy, which may not reflect your intentions and can potentially result in higher inheritance tax liabilities. Now, by taking the time to create and regularly update your will, you can make use of available allowances and reliefs, helping to minimise the tax burden and ensure that your wealth is passed on as efficiently as possible. Another simple way to reduce inheritance tax is by making use of your gifting allowances. You can gift up to £3,000 each year tax-free, and even more in special circumstances such as weddings. For people with more income than they spend, then gifting from excess income can be a fantastic inheritance tax allowance if set up correctly, and is one of the most underutilised allowances. To combat more significant inheritance tax liabilities, then larger gifts may also become tax-free if you live for 7 years after making them. Gifting is a lovely way to see your loved ones benefit now rather than later. Another uncomplicated but extremely effective solution is to insure against the inheritance tax liability. This means taking out a policy that pays out a sum of money upon your death to provide the funds to your beneficiaries to meet the inheritance tax liability. Now, as long as this type of plan is set up correctly, it can pay out quickly without the need for probate and prevent any undue stress at what will already be a difficult time. Trusts are also a powerful tool and often used with this type of planning. They allow you to pass on assets while still keeping some control over how and when they're used. They can help protect your estate from unnecessary tax and ensure that your wishes are respected. In fact, when we look at establishing a will for someone, one of the key discussion points revolves around bloodline protection, or keeping the eventual inheritance within the family. Passing wealth through generations can sometimes mean double inheritance tax, or more common is wealth erosion from social impacts such as divorce. Trusts can be a valuable structure to protect family wealth, including larger lifetime gifts to children and grandchildren. So, I've mentioned there are a few strategies that can help to mitigate inheritance tax. But it's worth mentioning some of the common mistakes we see being made. A common scenario is where somebody gifts an asset but actually still retains a benefit. Now, this is typically seen when someone changes the ownership of their main residence to their children, but crucially continues to live in the property without paying a full market rent. This will not remove the property from your estate for inheritance tax purposes, as it is called a gift with reservation of benefit, and in such cases, HMRC will still consider the property as part of your estate when calculating inheritance tax. Now, to be effective, you would need to pay a commercial rate of rent to your children and genuinely give up ownership and control, which is rarely practical or desirable for most families. This leads me on to another common mistake, which is not seeking professional advice. Inheritance tax rules are complex and often subject to change. Consulting with a professional advisor can help you make the best decisions for your own circumstances, goals and objectives. So I think to sum things up, I would say that inheritance tax doesn't have to be a burden. With the right advice and a clear plan, you can protect your legacy and give your family the future you've worked hard to build. To get started, why not download our latest guide, Common Inheritance Tax Mistakes, which is now available on our website. It's packed with practical tips and insights to help you avoid costly errors and make the most of your legacy. Thanks for watching, and if you'd like to speak with one of our advisors or legal consultants, then we'd love to hear from you. Thank you.